All right, and welcome back for another episode of Carnivore Trades. Today is Wednesday, September 21st, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, Fed day out of the way here, and pretty much you can see the result for yourself. Typical little sideways action, dump into 2 p.m. on the 75 basis point hike and an increased dot plot projection. Some hedges came off, and they kind of front run Powell's speech here, and then we just got a bull break of that 390 level. You can't really see it on the spiders. If we could see it on the SPX though, got a little bull break there of that 390 level, and then we couldn't follow through, couldn't take out the highs, and bears regained control, and we closed near the lows of the day, or at the lows of the day. There is a little bit of short-term support here at 3,800, and that is that 75% retrace we've been talking about. I thought we would hit this earlier in the week, but we did hit it on the triple Qs. But either way, there will be a little support here. I don't expect it to be that much because we already consolidated for 3 days. And then you have this little gap here at 37.90 on the spiders. That's right around 377. We basically filled that right now. Yeah, we actually filled that today. And that last little flush there in the last 10 minutes. So that gap is filled. I don't expect it again to be major support because you did kind of bear flag here for 3 days before testing that level. Currently at this time, when I mentioned this last week, I believe it was last Thursday, I said we're at risk of a waterfall here. And with today's price action, I think we could get that tomorrow. So you had a chance to short squeeze. You had a chance to have a bull, reversal, and it completely, the bottom fell out of it. So we could gap down tomorrow, and we could have a waterfall here. As far as targets, you'll definitely have support here around 370 on the spiders, and then of course right into the gap, and then the lows after that. Then there's that 360 level, which goes back, all the way. Actually, got to go back way back here, or weekly. But yeah, that goes back to that pivot there from 2020 in August. So that was a previous all-time high. Never quite got tested there. So we'll see if that makes it. And then you have the 200-week moving average below that. Now, we're talking really bearish targets here, but this is bearish price action. So, what can you say? We've been expecting this, and really, what I've been saying the last several weeks, if not months now, the 2-year yield's telling you the whole story. So the 2-year yield cracked 4% today. It did come off the lows by the end of the day, but this is the reality that the Fed is in. And if we flip over here, I'll pull up the actual yield for you. That's the 30-year yield. Now, 30-year may be acting as a little bit of a safe haven here short term, as that did pull back in really ever since 2 p.m. Got a really nice bid, so that could be a safe haven trade. We'll talk about the metals too, because that is starting to change here. But the 2-year, just since September 13th is up 50 basis points here, the 2-year yield, that is. So the Fed's 75 basis point hike today did almost nothing. Like, that's how behind the curve these guys are, and that's why I've been advocating and saying, like, they should just go 125 and get it over with, or even 150, and they can actually be ahead of the curve and be in control for once. But, they're doing it the Fed way, which is the wrong way. And again, the 2-year yield there continuing to surge higher, and we saw, it's been doing that all year long, but we saw the NASDAQ really starting to bid up, a week or two ago, and it was like, guys, the 2 years lower than the June lows. That's telling you the NASDAQ's got to catch up. And that's really what we're seeing here, and the market's starting to realize that. So NASDAQ down 1.79% today. Take a look at Google. We've been pointing this chart out here. Is that not a beautiful bear base or what? I mean, that's a great bear base there on the weekly. And that's losing this support here around 100, even number. And then you really got down to that 200-week moving average, and then really at $90. That's kind of what we're looking for on Google. But that's your next big area. Microsoft as well. I've been pointing out this head and shoulder pattern that triggered. See, again, nice bear base on the weekly. One or two outside weeks, and then right back into that range. But notice this area right here around 210. Again, 200-week moving average. Head and shoulders, 40 points from here to here, 40 points from that break would take you right around 210, 215. So we've got real estate on the downside here. I mean, it's been clear as day. You know, as soon as we broke this blue trend line, you know, the writing's been on the wall, and it's been on the wall from a macro perspective as well. But, you know, the bond market generally leads the stock market, and that's just how it goes. For the bulls, your best chance of anything tomorrow, if you're gonna reverse and change this, well, first of all, we do have fall equinox, and the equinox and solstices can be turning points. They often are. They were back here. June 17th was summer solstice. We had a long weekend. The 21st, or excuse me, it was the 20th. I believe it was the 20th was the summer solstice. This was the 17th. We had a long weekend. That ended up being the pivot. Point is, that was your pivot there. And, you know, I suggested that at the time that was probably going to be, you know, a turning point. It ended up being that. So usually when you trade down into a cycle, you tend to get, you know, a counter trend move. But this price action suggests that we could see an acceleration, like an accelerated cycle, or a continuation cycle. But the best chance for the bulls here is you get a gap down, and you have to V-shape the first hour. Just 1, 2, 3, 4, 5 right up. No bull flagging, no pullbacks, just V-shape. And then, you know, really from there you need to see follow through into the afternoon, into the close. If you can do that, you can save this by the end of the week. But I mean, this is, you know, how many chances of the bulls had to save it? I mean, they could have saved it last Friday by closing back above this pivot. They could have gapped down. They could have closed it back above 390 on the spiders. They could have closed it above the 388 area. But instead, you know, we got an engulfing weekly candle. I mean, it's pretty much clear as day here that the bears have been in complete control. And now we won't rule out bounces. Nothing goes down in a straight line forever. So, you know, we've always been, you know, making the case that, hey, we could bounce up off the FOMC into this trend line, maybe into the 20, maybe into the 100 moving average. Maybe on a best case scenario, you could go up and retest this white trend line, or somehow get into this kind of nexus right here, this kind of convergence of all the trend lines and moving averages. That would be a logical area. But, you know, you got to call a spade, and we had a pretty good sell-off here today. So big move down there. There's the triple Qs. So that is now below the 75% retrace here. So right there, so that is now breaking. And again, same thing. If we gap down, you could get a reversal. That's your best chance for the bulls. But if they can't do that first thing in the morning, we could waterfall sell. And really, there's, you know, the floodgates could open up here. So the Fed really just came out, and they were pretty much hawkish the whole way. And, you know, did not really pledge any sort of support here for the market. IWM here, again, you'll have some support here at this trend line. Again, this is a monthly trend line, so, you know, it's not always going to react immediately. You can see over here, you know, we basically chopped through it for a month before it ended up bidding up, and then you'll have that blue trend line there as well. Again, going back, so there's your blue trend line, that previous pivot high, and then this previous level here should be good support here for the short term, but eventually I do think it will break. But overall, it still should be good, especially if you go straight down into it. But Russell 2000 getting hit, obviously, just with everything else, and the diamond down as well. So that will have some short-term support around that gap fill, around 298 and 300. But again, everything very, very soft here, pretty much across the board. One sector that was, well, I wouldn't even say strong, but semiconductors actually managed to not take out the low. So that is a little bit of a positive here for the bulls. NVIDIA actually was green, so scratched out just over 0.5% gain. So NVIDIA in much better shape here. AMD down 1% though. And, you know, overall, even though it didn't take out the lows, that's still a pretty ugly daily candle. You know, we tried to rally up, went up basically into this this red bar opening area, and, you know, faded off of that. So a pretty weak close, all things considered. IGV, speaking of bare bases, you know, this one looks just like Google, just like Microsoft. Beautiful weekly bear base, and now you're right back to the lows here. If these don't hold, you know, there's a lot of downside in the cards here for IGV as well. So cloud software week. Let's take a look at biotech. So biotech down, you know, another 3.5% today. Still has a little bit of support here at this area. And again, not a terrible pullback pattern, but this was a beat up sector, right? So it's outperforming now because of how beat up it was all year long. But again, you don't want to see it lose that 100-day moving average. If it does, it's right back down to about 73, 74 bucks on the daily time frame. Dow Transports, another 52-week low, and in fact, a 52-week closing low was made as well. So again, transport's still on the weaker side. They've been leading to the downside. Again, we said yesterday, it's a red flag that this thing got such a bullish candle here, like it was going to hold that double, triple bottom, and just immediately faded that. So Dow Transport's weak as well. Again, if we waterfall, everything's going to go down. It's really nothing's going to be spared here, although there will be sectors that may outperform a little bit, may hold up a little bit better. But the rising tide and the falling tide lifts and brings down all boats. We talked about rates a little bit here, but 10-year did manage to reverse by the end of the day. So again, maybe bonds getting a little bit of a safety bid here, 10 and 30-year coming in. Even HYG did finish off the low. So a little bit, again, there's a couple of positives out here for the bulls. But overall, I mean, there's no way to spin this. It's just it's a brutal beatdown. And the fact that you rallied up as much as you did and then got, faded that hard is never a good sign here. But there are a few positives here. Bonds rallying a little bit, although bonds rallying doesn't always mean that, it's not like a one-size-fits-all. It doesn't mean the Fed pivot is coming. It just means that it could just mean that the market's looking for safety. And we'll talk about that with gold as well in a minute. But anyways, HYG coming off the lows. Home builders here via the XHB. Another local low there, so in danger of losing this pivot on the daily. Next area down here is probably going to be right around 54. So that's going to be your daily support there on XHB. And ITB, still not making a new low, so holding up a little bit better. This one does have some retailers in it. I do believe we have Costco next week, I want to say. I believe Costco reports next week, and I think a few others as well. I'll double check on that. But, the Home Depots of the world and stuff like that make up the ITB, so it's a little bit different. It's not as much of a pure home builder play there, but again, down just like everything else. VNQ into double bottom. This should pierce that tomorrow. We'll see if they can save it and get it a bid, because it is oversold going into that level. But what a fall here. I mean, just on August 16th, this was at 102, and it's back down to 86 right now. So amazing fall there for the real estate stocks. XLF here. Nice barf there on XLF, so losing this support area, and that is weekly support. So there's that pivot low. So now below that, a close below that by the end of the week will probably take you back down to the lows and that 200-day moving average. So XLF coming under some pressure, down 2% today. XBD broker dealers, again, still remaining strong, and we talked about that the other day. The volatility does help the broker dealers a little bit. They have a little bit less credit risk as opposed to the banks, with the yield curves being inverted and so on. So broker dealers holding up better, and they they're selling options. I mean, they probably just made a ton of premium today with just option spreads and whatnot. So these guys are holding up a little bit better here, but obviously down with everything else on the day. As for oil, kind of a nothing burger for oil, right? Down 1%, but that's par for the course for oil these days. 1% in a day is nothing. Again, I'm still looking for a little bit more of a dip here. I wouldn't rule that out, especially if we start getting margin calling. So that's something we got to watch out for. But oil holding up on a relative basis. It still could be, you could still make a case, even though you closed above this red bar on the daily, still could make a case you do have kind of bearish consolidation. This big move down, and you're still in the lower area of it. So we could be building a short-term bear base here, but ultimately I still love crude in this zone for accumulation, and any dip here I will be buying personally. XLE engulfing reversal there on the daily, down 1.5%, but again, a sector that's holding up better than the rest, right? Higher lows, right? And then we look at the spiders, still making higher lows here, but look at where you are on the chart here going back to January versus the XLE, which has made higher highs since then. So XLE energy holding up much better. It's no secret. Same thing with OIH and XOP. Engulfing reversal on the daily, but holding up better than the rest. Nat gas here, again, a nothing burger. Kind of marches the beat of its own drum sometimes, but we'll watch this. If this starts to continue sideways, it could be building a bear base for a move down to that 650 area. I wouldn't do anything with it currently until it gives us more direction. Then the dollar index made new highs again today. What else is new? Dollar index above that 111 handle now. It's overbought, it's parabolic, it's extended, but your next real technical area is, it's up to 120. And if you do measured move here from this pivot low, so just round it up to 80, we'll say, 80 to, 100 right here. And then you just take, the breakout, 100, 102 plus 20, takes you right up to the high. So there's nothing to say the dollar can't go up there. And the dollar continued higher today with the 30-year kind of coming back in, right? So the 30-year did come back in off the highs and actually closed down 1.6% there. So it's kind of shifting from like a rates up, dollar up trade maybe to a rates down, dollar up trade in a risk off sense. So something to watch. One day doesn't make a trend, but something to keep an eye on there. But for the dollar index, finally, we'll talk about gold. Again, acting as possibly a safe haven. So if we look at the GLD here in the corner of our screen, we can see, it came down and it started to bid up and it started to make higher highs before the market did. Silver here. This bullish pattern here on silver has not been violated. In fact, it's actually holding up really well, and it's looking better every single day. In fact, you have higher lows here on silver and higher lows here on GLD and GDX intraday, higher lows potentially. So we're seeing, let's take a look at SILJ. Yeah, again, higher lows. So metals holding up here. Doesn't mean they can't go lower if, we really, again, with margin calling, that's always a possibility. But the market's telling you that, hey, we'd rather be in GDX, I'd rather be in gold, I'd rather be in silver than be in any sort of risk asset, and I'd rather be in that than treasuries. At least that may be changing though, if if treasuries do get a bid here. But basically, the market's telling you risk off, and it's telling you, here's a theory: what if the dollar tops out right and starts to reverse sharply, and yields continue to go higher? Then what? Then where do you think people are going to park their money, right? So don't sleep on gold here. Sentiment is terrible on gold. Every time it's failed as an inflation hedge, oh, this and that. This is where I'm starting to get interested in metals. That's why I'm getting interested in metals, because everybody hates it. So, and I mean, it makes sense from a risk-off perspective as well. But anyways, gold showing relative strength here. We talked about silver, platinum down 1%, but we know this is going to be coming into resistance here today with that trend line. Also hit a 75% fib yesterday, and it actually was, made a higher high today. I do expect this one to make higher lows. Maybe it could come back to 875, somewhere in that area, but I do think this makes a weekly higher low and has legs for a move up. Palladium, also kind of a nothing burger today, just a little inside candle there, but no real problems on the daily. And then copper also slipping a little bit. So got to watch here. That took out that low. You still could have potentially higher lows, but remember, copper is a little bit more sensitive to recession. And if the market thinks the Fed is overdoing it, that could make copper vulnerable here, for some selling pressure. And then lastly, let's get over to the coins here. So Bitcoin managing to scratch out a gain. Really kind of an inside candle. Really quiet here for Bitcoin today. And crypto, again, maybe that's a little bit of a positive. Again, moving forward, right? So the fact that everything else dumped, but Bitcoin and crypto didn't, maybe it's behaving as a risk-off asset. I don't think it's anywhere near that point yet. I still think there's too much froth in it from a long-term cyclical perspective, but it is noteworthy that you basically put in a doji here on Bitcoin and Ether, and they kind of held up. I mean, the only one that was really down was Terra. The new Luna. Celsius is actually up 7.5. So a little bit of strength here from crypto again. So there's your positives for the bulls, I guess. Crypto showing relative strength, semiconductor showing relative strength. But outside of that, I mean, let's call a spade here, guys. This thing got pounded today. We had a chance to squeeze the shorts. They couldn't follow it through, couldn't keep us above 3,900. We're trying to hold on to that 3,800 area here in the after hours. And again, that's that 7.5% retrace. We are just slightly below that here. We may get a bounce, but if we gap down tomorrow and the bulls don't V-shape us, we could waterfall. So do with that what you will, I guess. I still have, basically the way that I'm positioned right now is mostly short. Wish I was more short, but, you got to be careful in this market, because the market will punish you for being wrong here. I mean, we have 100-point moves in the spiders or in the SPX like it's nothing, pretty much like on a weekly basis at this point. But, you know, I'm positioned, you know, long metals and, you know, still short the market here, although we did take some profits off the table, sold part of our QID position here today near the lows, and really just trying to lock in those gains. And you know, this is not a market that you want to play with. So anyways, guys, before I start rambling here, I'm going to wrap it up. You guys take care. Come find me on carnivoretrades.com. I'll talk to you all tomorrow.